Good morning, good afternoon, everybody. This is Deborah Jones, your Blue Table Talk host. And tonight I have someone special here tonight that's going to talk to us about mortgage loans and first-time buyers and refinancing our homes. But before we get into that, I have to do a little housekeeping. And so as I do the housekeeping on our coronavirus, let's see, we could take our free rapid test at Beaumont Urgent Care, which is 3650 North Major Drive here in Beaumont, Texas. The phone number is 333-127-1272. We can also take it at MD Kids Pediatrics at 490 IH10 North Frontage Road, Suite 100, 409-12-2198. And we can take it at TAN Healthcare, 1495 North 7th Street, 409-832-3377, and that's funding. And also, which is funding for is our TAN Healthcare in Orange, and that's 3737 North 16th Street, Orange, Texas, 409-920-4223. Also, Gordon Chapel Baptist Church is distributing the home test, where you can get your results in 24 hours. What you need to do is go by the church and go in the parking lot at the church, and you get your barcode, and all you need to do is scan it then with your smartphone and get the information. They'll give you the information that you need, whereas the FedEx truck will come deliver the test to you. You take it, they pick it up, and then you get your results back in 24 hours. So either way you want to do it, you can go to the building itself, urgent care, or you can go to Gordon Chapel, and they do this every day. So go after 4 o'clock, and they'll do it from 4 to 7. I think that's the time. The vaccines are out now. It's in the United States. You have the Pfizer, which is not 95%. Now, when it comes to here in Beaumont, Texas, we'll get that at the end of the week. So the Pfizer is out and is 95% effective. And so, but the Moderna is coming out tomorrow, and it is 94.5% effective. But they also said that people over 65 is an exception for them, because it'll be 100% effective. How about that? The only people that can get the vaccine right now are the healthcare workers. And here in Beaumont, it'll be at Baptist Hospital and the medical center. So I don't care if you get the shot, you have to wait 21 days to get your second doses. And then after that, you still have to do the 3 W's. You have to wear your mask, you have to wash your hands, and you have to watch your distance. So let's do what is needed to do. Don't forget the flu shot. The flu vaccine is still out. This is flu season, and it is 60% effective. So that we know that right now they have over 300 people who have died from COVID-19. And right here in Beaumont only, we had 4 people today who passed away today with COVID-19. The women were 64, 66, and 81, and there was a man that was 76 years old, and all of them had underlying issues. So let's do what's effective. Let's continue wearing a mask. And I just heard on the television before I came on that Judge Brannick was saying that it is mandatory that we wear our masks. Here in Beaumont, we wear our masks, and if the companies that you go to, you don't have your mask on, they have to make sure that you put it on. So like I said, I see a lot of people without their masks on. And how can we stop spreading the virus if we're going to continue to do what's not right? So let's do what's right. Continue to wear our mask and social distance. Somebody come close to you, make sure you tell them to just move back a little bit and keep apart, so that you won't catch this virus. All right. So tonight we have on here Mr. Robert Lewis, E. Lewis, and he'll be coming on in a few minutes. Let's see.
Here we go.
How you doing?
I'm fine.
Yeah.
I'm fine. How you doing?
I'm doing great. Thank you for asking. So we're going to talk tonight about mortgage loans and first-time buyers and refinancing. But since we're in this COVID season and everything, what do they have to do with our mortgage loans?
You know what? You didn't get our joke. I got my mask on. You see me?
You know what? I turned my head.
Yeah, you getting on us about that mask. I'm like, let me put my mask on.
Wear that mask.
Yeah, and I know we're all joking aside, and prayers out to the families that are grieving the loss. I could only imagine. But with that said, Auntie, you know what? Let's do this. Let me give the folks my name, Robert Lewis, NMLS license number 180100, and that NMLS stands for National Mortgage Licensing System. So with that said, to answer your question, is there a little feedback or is that just me?
No, I don't hear that.
Okay. I didn't want to have any feedback on your show. So to answer your question, there's a lot going on the mortgage front as it pertains to COVID-19 and the CARES Act. Okay. And I want to just point out a couple of things for those, and we'll do it like this. Let's start out with those people that are currently homeowners. Okay. Because there's a sunset coming up here that a lot of people might not be clear on. And so December 31st, there's not really going to be something that you need to worry about if have been negatively affected by coronavirus and you're dealing with forbearance or modifications. That's really should run to up to April of next year, especially if you have a VA loan. That said, I want to admonish people, just like you are with the bulletins that you're doing, to be proactive, to communicate. Who are you needing to communicate with? Your servicer. Who is the servicer? That's the place in which you're making your mortgage payment to. If you're in a situation where you've lost your job or something has happened as a result of COVID-19 at no fault of your own, don't sit back and let the thing blow up on you. Okay. So communication is always the key. Reach out to that servicer, let them know what you're going through and see if there's some things that you can work out. There's modifications, there's partial modifications, there are repayment programs, there's things that can be done. Lastly, if your loan is insured by the government, and that's Freddie Mac, Fannie Mae, FHA, VA, or USDA loans, any of those loans, you can rest assured that you have some advocates. So you could go to the CFPB, and type in HUD counselors or HUD counseling services and reach out to those folks, because they don't have any skin in the game. They don't have any motives to try to, talk you out of your house or something of that nature. And then they could direct you into the direction that you need to go to help, save your house. Last thing I'll say, Auntie, if you find yourself in a position where you can't handle the house, here's the deal. Look at Brother Rob when I'm talking to you. The house is not who you are. Okay.
Right.
Don't let yourself go under trying to hold on to something. You could get another house. Okay. So don't let some of these Johnny come latelys. You're probably getting stuff in the mail, all of these investors and wholesalers and things of that nature. I would advise that you get with Auntie and tap into her resource of realtors. You could reach out to me, and you want to be proactive. And while you're doing the counseling services and seeing where you are, you also want to see where your house is. And if you can sell that thing because it's a hot market, you might be able to sell it, gather some of those monies, recoup down the line, and then find yourself in a better position at another time. Make sense? Right.
Makes sense.
Yes, ma'am.
Yes, makes sense.
So that's for the people that own a home. Let's get into the people that are looking to buy, right? Purchase type transactions. And really the only difference that I'm seeing on the front as it pertains to COVID-19 and some of the overlays, some of the things that we are requiring from a lending standpoint that you do. If you're a business owner, okay, here's the deal. You're gonna have to make sure you keep good books, because we're gonna want your most recent year-to-date profit and loss statement, a P&L, okay? Prior to closing, 10 days before closing, we're gonna want that bank statement to show that you still have funds coming in the account that are commensurate with the income that we're using to qualify, okay? It's all about timeliness and right before closing to make sure you still have those monies. So there's a couple of extra steps if you're a business owner. If you're a W-2 employee and you're looking to apply, the only thing that I'm really seeing is at the time of closing, you're going to sign about 15 affidavits stating that you haven't lost your job due to COVID-19. You're not going to file for forbearance after you sign your documents and things of that nature. So again, nothing to scare anybody. It's common sense type stuff. And if you find yourself in a position where you think you might be losing your job, you really shouldn't be looking to buy a house anyway, right?
Right. Exactly.
Yes, ma'am. Yes, ma'am.
Right.
So that's what I would say on the coronavirus front. I'll fall back and take your lead from there.
Okay. So what is that the home buying process?
Well, no, ma'am. I'm not going to say this is what I'll say the home buying process is, and I'll give a 10,000-foot view. For those that want to buy, the first step that I always advocate is the gathering of your documentation. Okay. And there's 4 to 5 pieces of documentation that's synonymous that everybody's going to deal with. And so we'll start with the income, your proof of income.
Okay.
And I'm going to take this from the standpoint that these folks are W-2 employees, which simply means that your employer is collecting your taxes for you. They give you that W-2 at the end of the year. Okay. So gathering of the documentation. Number 1, pay stubs. Most people are paid on a frequency. You're either once a month, bi-monthly, which is 2 times a month. A lot of teachers and things of that nature, right? Bi-weekly, the difference is you get 26 pay periods opposed to 24 pay periods over a year, right? Or weekly. So we're going to need your most recent 30-day snapshot. So pay stubs. Okay, that's the income. Identification. Your driver's license, a legible current driver's license, and a social security card. Okay. Number 3, the W-2s that I just mentioned from your employers, from all employers for the most recent 2 years. I want to pause here. A lot of people have the misconception that you have to be on the same job, Auntie, for 2 years. And you don't. We're going to cover a 2-year history, right? And as long as there's no major changes, let's say you went from being a educator and now you're a fighter pilot. Or let me back up. You went from being a fighter pilot and now you're a plumber. Well, now those are 2 different industries. Right. So you don't have to be on the new job for 2 years, but we're going to possibly want you to be in that new position for 30 days to 6 months, depending on a couple of other factors. Okay. But anyway, W-2s, right? And the tax returns. Okay. Where do I get that stuff, Robert? Your tax preparer a lot of times has it. Okay. So income, taxes, we'll call W-2 taxes, identification. Now your assets, your bank statements, stock statements, things of that nature, 401ks, wherever your monies are going to come from for down payment, closing costs, and things of that nature. So those things are synonymous. And if you gather those things up front, that's the first step to make sure you're on the way to having a great experience to qualifying for a loan. And this is very important. I say this because a lot of people miss this. Because one thing that we don't do in our community is we don't shop, right? Right. And I just had a scenario today. Fun fact, a customer a couple of weeks ago, we went through the process. I got them approved, gave them a letter. They're ready to go. So their bank came to them and whispered in their ear, you know how it goes. And I offered them the opportunity. I was like, well, let me see the loan estimate and, make sure you're comparing apples to apples. No, we're going to stick with the bank. Well, I said, okay, make sure, because once I turn the application, I'm moving on. So sure enough, today I get a text from the agent. Hey, the bank did a bait and switch, and can they come back? Well, unfortunately, they can't come back with me because I'm helping other folks. So I say that to say this: when you have your documentation in order, you can shop, and don't be afraid to shop. Here's another misconception about shopping. Well, my credit score is going to go down. The CFPB states that you can have a mortgage inquiry with 10 people if you want to within a 45-day period, right? I don't recommend that. I say 2 to 3 people, okay, where you want to compare apples to apples, but that's not going to lower your credit scores. The mortgage inquiry is looked at as one inquiry. Now, what happens a lot of times is you might be dealing with people with marginal credit, or you might have credit card balances that are going up and down. And from one lender to the next, whenever they pull a score, you might have a change in a credit scoring situation. But again, if you're talking with the right person up front and you're planning for this, you'll know whether or not, you need to do those types of things. Does that make sense? Mm-hmm. Okay. So getting those documents together so that you can shop. Then once you've submitted an application, here's the key. A lot of times folks are half filling out an application. They might submit one of the 5 things. And then some of these lenders are out here issuing approval letters. You ever heard the term garbage in, garbage out?
Yeah.
That's what happens. Okay. So guys, this is a major process. Okay. I can only speak to how I work. I don't touch applications anymore unless I have the checklist items, because I can't give you the decision that you need without those items. Moreover, you don't want me to give you the decision without those items, because your money is in jeopardy. Meaning, if you get a bogus letter, you get with your realtor, you guys find a house, you fall in love, okay? You submit an offer, the offer is accepted. Well, you got to put earnest money down, right?
Right.
And option money. Well, those things could be in jeopardy. And what I hear a lot of times is, because for whatever reason, some of these lenders are busy or whatever, but it's always after the option period. And now guess what? Your earnest money could be in jeopardy. You could lose that, right? So I call it the slow down to speed up. So again, submit a full application, submit your documentation. And then from there, your lender, once he has the 6 pieces of information that's needed for an application, within 3 business days of that application, you should get what's called the initial disclosures. In those initial disclosures, the main document is called the loan estimate, right? Mm-hmm. And in that loan estimate, it should give you a very good idea. If I'm a professional, I'm doing my job, it'll give you a very good idea. And I usually do worst case scenario because I'm bound to those numbers, right? Mm-hmm. And now when you get that loan estimate, you can compare apples to apples, right? Mm-hmm. And so that's the 10,000 foot view of the loan approval process. Okay. And I'll leave it there.
So do you think everybody know what the earnest money is? What is the earnest money?
I don't think everybody knows, and it blows my mind because there's a gazillion home buyer seminar classes, right? And invariably, when they come to me, nobody knows what the earnest money is. Mm-hmm. So earnest money, and I'm not a realtor, but I've been doing this a long time, and this is how I explain it, because I'm a simple guy. Earnest money is the money that you give to the title company, not to the seller of the home, but that shows the seller. If I'm buying your house and we have a mysterious agent here, that's the negotiator for you, between you and I, right? Mm-hmm. And you say, okay, I'll sell Robert this house, but I want to make sure he's serious. So I want him to put $2,000 down in earnest just to make sure that he's good. I've seen his approval letter. I know his lender. I see his videos and I know he's approved. I'm just talking about me on the slide. But anyway, I know he's approved. So, but I still want him to put that $2,000 up. So that money goes, and in essence, it takes that house off of the market, or it makes the seller want to take the house off of the market. Moreover, the seller also will say, hey, you know what? I'm only going to take my house off of the market for a period of time. Let's say 10 days. And that 10 days, I'm going to give Robert an opportunity, if he so chooses, to do his due diligence on this property, i.e. an inspection. That's called an option period. Mm-hmm. And typically what I've seen, we're here in Texas, it's $10 a day for 10 days or $100. So now from a home buyer side, and you mentioned earnest money, I went a little deeper. Out the gate, Auntie, I need $2,100 in that example, right? Mm-hmm. And so you got to have some money when you are even offering or submitting offers to get a home. Right. Now, in that 10 days, I have an opportunity to get an inspector to make sure everything is where I want it to be. And let's say I do that. That could be anywhere from $300 to $700, depending on the size of the home and what the inspector looks at. So now we had $2,800. Okay. Now watch this. The inspection, that's just insurance for me. If I decide within that 10 days, I don't want this house, I found something, I'm gonna back away. The option money goes to you because that's the time that you took your house off the market. And the concept is you could have possibly missed another buyer, right?
Right.
So you're compensated for that time. The inspection money that I spent, that's just for my peace of mind. I don't get that back, right? Now, if I follow the rules and I say I want to back out, the earnest money comes back to me as long as we cancel within that 10 days. But we out possibly $400 or $500 just with option and inspection.
Oh, okay. Okay. So that when I give that earnest money, they have to put that money in a trust fund or something like that. And
that's what the title company does. That in essence, right? And you're not gonna earn any interest or anything off of it. They're just holding it. Right.
Just holding it for you. But does it go towards the house itself?
So if you proceed and you say, hey, I'm going to move forward with purchasing this house, yes, excellent question. The earnest money and the option money will be credited or deducted from the total amount that you need to bring at the end. So yes, it will be. Mm-hmm.
Okay. So I heard people talking about discount points. What are discount points and origination?
Excellent question. Well, you've been studying. You trying to catch me, huh? So let's start with discount points, okay? Mm-hmm. And I'm going to throw a couple of terms out and explain them. So say par. Say par for me, Auntie. Par. I don't know if you ever heard that term, par for the course for golfers, right? Mm-hmm. Par. So par, guys, means everything is equal. It's even, okay? And everything above par, okay, we're going to say is a credit. Mm-hmm. Anything below par is a cost. So when people come to me and they say, hey, Robert, what are the rates? Okay. And let's say I got an application and everything, and I'm giving you a rate quote. Say it's an FHA rate quote. Mm-hmm. You got excellent credit. And I say, Auntie, your par rate today, if we were to lock it for 25 days, I could get you a 2.25% interest rate for a 30-year fixed. And well, let me go up a little higher because that's the lowest rate we offer. Let's say I could get you a 2.75%, right? Mm-hmm. And you say, well, you know what, Robert? I was working out, you do those workouts, and one of the ladies was saying she got 2%, right? And I want 2%. Well, you could get 2%, but par was 2.75, and every rate underneath that you would have to pay discount points. And it's just a fancy term to say that you're paying money in advance to get that rate. So I always quote par. If you want to pay discount points, it's money that you're paying to buy for a certain rate that's below par. Mm-hmm. Okay. Now, sometimes people they might say, well, you know what? I didn't have any closing costs, right? Mm-hmm. Well, a lot of times what lenders do, if par is 2.75, let's say at 3.5%, the lender has a credit or a percentage of 3 points. So let's say you bought a $200,000 house.
Right.
3.5, 2 times 3, that's $6,000. Well, right. the lender could say, well, we can help you with your closing costs, but we got to give you a higher rate. That's what they mean. Nothing's free. Nothing. Okay? It's just you don't know where you're paying for that, right? That's so right. Now, last thing, origination. And this is key. And this is why I went back to the loan estimate and doing the application. Okay. All a lender can control. And let me pause here and take a sidetrack. There's 4 types of lenders. And these are good questions for you to ask your lender because they should know these things, right? Mm-hmm. So you have your primary lenders. That's your Wells Fargo. That's your big boys, right? Right. And they accept deposits as well. Okay. Mm-hmm. Then you have folks like me. We are called mortgage banks. We don't accept deposits, but all the loans that we fund and originate, we fund in our name, and we're using our money throughout the whole origination process. And some of the loans we just decide to keep, we actually do the servicing where you make the payments to us. But ultimately, the business model is 96% of the loans that we originate, we're going to sell the servicing rights to somebody else. Okay. Mm-hmm. Then you have a correspondent lender. They're a smaller version of us. So they don't have as much money to fund, nor do they have the support to help them. That's very important in these times. Right. And then you got the mortgage broker. A lot of your mortgage brokers are going to have origination fees. I used to be a mortgage broker, so I'm not hating. Shout out to the mortgage brokers because there's enough for everybody. Right. I'm not from the scarcity mindset. So Mortgage brokers a lot of times have origination fees, okay? Because somebody's paying them to originate, or if they don't have origination fees, sometimes you as a buyer, you have to pay what they call borrower paid or lender paid type compensation. But an origination, in the example that I gave, it's a percentage. And so say you're doing a loan, somebody says, hey, that Robert could give 2.75%, no origination. I could give 2.75%, but I'm charging 1% in origination. And that's 1% of the loan amount. If the loan amount is $200,000, that's $2,000.
Right. Wow.
So section A of the loan estimate, that's where you compare your lenders. Last thing I'll say with that, there's a myriad of fees. I don't believe it. You shouldn't be paying origination, in my opinion, right? But as far as admin fee, processing fee, and however other fees they want to cut it up, excellent fees are, let's say, anywhere between $1,000 to $1,800. You're good. Once you get over $1,800 in those lender fees, they charge it too much.
They charge too much.
I charge $1,495. $895 comes to me. $500 goes to my processor. And that's if you're doing $1 million loan or a $70,000 loan, right? And I don't have any other fees. You may have a discount point if you choose to buy down the rate, but I don't recommend that in a lot of cases because I'd rather you keep that money in your pocket and do something else with it.
Right. So since we are in this COVID season, and it says a pandemic, but it's happened to be now an endemic because it's catered towards black skin and brown skin. The interest rate and the APR, is it lower now, or is it at a standstill, still the same thing?
Rates have been historically low. And you know what, before we get there, I don't know if you wanted to, Ms. Chapman says she's loving your show.
Oh, thank you. Thank you.
Yeah. But before March of this past year, actually, if you go back right at the end of 2018, the stock market took a big dive. Okay. Right. Long story short, the reason rates are really low is because the Federal Reserve is buying a lot of mortgage-backed securities. Actually, from the last recession, all the way back to 2010 up to 2018, the Fed was buying a lot of mortgage-backed securities, okay? And long and short, not to make it an economics class, that's what helped keep the interest rates low, right? And so when they pulled back from buying them around September of 2018, that market crashed and they were like, they have to start buying securities. Now, when COVID hit, they propping up everything until they buying X stocks. A lot of these folks invest in this stuff. A lot of this stuff, I feel, and I'm not an investment advisor. Seek your advisor. This is not investment advice, but a lot of it is inflated, right? So with that said, this is just Rob speaking. Do your own research, but I perceive rates being in this low rate environment for the foreseeable future. And that's why people need to jump on board, because 2018, if somebody could get in the high 3% range, you at the job bragging. Rates are in the twos, auntie. In the twos. It's never been like that before. So at some point they'll go up. So if we knew what was going to happen tomorrow, you guys wouldn't be watching. I wouldn't be here, right? We'd be doing something else. So you can only take advantage of what you can take advantage of in this time. Don't be the person, it's always something, right? So look at the numbers, run your numbers. And if it's in your grasp, I admonish you to jump on it. So yeah, I think rates will stay low for the foreseeable future. So
you're saying that the rates are not in the 2.7 or 2.5 or something like that?
Yeah, they're in the twos. I'm routinely locking people in the 2% range. And then folks that I would say that had marginal credit, and my credit guy told me the other day, marginal credit is anybody that has under 675. I was taken aback. I didn't know that. Yeah, really. So, but I mean, folks as low as 620, if you're doing government insured loans, anytime you're doing a government insured loan, FHA, VA, or USDA, the rates are always going to be anywhere between 0.5 to 5.25 to 6.25% lower than conventional. And it's just because.
I'm sorry, go ahead.
No, you go ahead. Go ahead.
I was getting ready to ask you about VA loans. How do they generate? What are the percentage on VA loan? I know it deals with your credit. I know it deals with your credit, right?
Yes, ma'am. Yes, ma'am.
So say my credit was, like you just said, 6 point whatever.
620. Mm-hmm.
620. Okay, so what can I get from that?
If you go on VA and you got a 620, lock one today, 2.75.
Do you let us know? Do your company let the person know how much money they can borrow?
Yeah, and that's a part of the origination process, the upfront process that I just talked about. So whenever after I've done what I needed to do and you did the application and supplied your documentation, what I typically do is I'm going to approve you at your highest dollar amount. You don't have to go that high, but you'll know what the maximum is, and you can always go south of that number. Right.
Suppose I want to go higher.
Gotta have some more money. Gotta have some more money, Auntie. Yeah. Everybody wants to go higher, but you know, can you afford it?
So nowadays, I ride around like looking at houses and everything, new houses they're building, and the house now I'm going for like $500,000, and I saw one the other day was $600,000. I'm like, dang, what's the deal?
Well, I'll tell you what the deal is. You're very astute, and this goes back to the interest rates. This is something for everybody to learn. And you, I gotta watch how I say this. I ain't trying to get in trouble. You're mature enough to know, because you've been a homeowner and you could remember when rates were 7%, right?
Yes.
And so whenever rates are high, the prices are low. Whenever interest rates are low, guess what? Prices are high because you have more people, and we'll use a house as an example. You have more people chasing less goods, okay? It's supply and demand. So, and then on top of that, in Texas, we'll use Texas, and I'm sure some of your realtors that are watching could confirm this, but inventory is less than 2 months. And a healthy market inventory should be at about a 6-month time frame. Mm-hmm. So especially anybody under 300, any purchase price under 300,000, it's a fight, Auntie. They knocking each other out the box. That's why you need to be properly approved and know what's going on. Make the decision of the team that you're going to deal with, because if it's under 200,000, I don't hardly even see any houses in the major MSAs, and we're talking Texas. So we'll do the Golden Triangle and you guys, right? But any decent sized city, that's why you see these house prices go to 600, and then the new conforming loan limit, maybe pull it up, it's $538,000, $538,600 for 2020. And so at one point in time, those are jumbo loans. Now that's the new conforming loan limit, meaning you could buy a house up to that price and get a convention. You could put as little as 3% down if you're a first time home buyer and you can afford it.
Yeah. Wow.
Yes,
so as far as first time home buyers, do they have to go to a class or anything like that to buy a home? Because I remember once before they had classes for first time home buyers. And so in order for them to buy a home first, they had to go through a class. So is that still what's the deal or what?
You know what? Excellent question. Let me just say thank you, Mr. Dent. I appreciate that.
And my brother.
Yeah. And if you know of somebody that this will help, for sure, share it, because and I'm calling the auntie. Let me stop being disrespectful. Miss Jones is always bringing on excellent information for the community. So thank you for letting her know. And I appreciate you. Here's the deal about home buyer classes. So you have real nonprofit organizations, okay? And again, if you go to the CFPB.gov and type in housing counselors, you could type in your zip code and it'll show you those folks that are truly home education counselors. All the rest of these folks, I don't know how they're doing it, but they in cahoots with the lender, the realtor, and they run you through there. They get, it's just to get the customer, right? And then so that they can secure you through the process. Mm-hmm. So no, you don't have to go to a home buyers class. And you know what? Before I get off of here, remind me, I'll drop in a link, a free one. And anybody that's a first time home buyer, if you go to this link that I'm gonna drop and take it, you'll get a certificate, right? And that certificate is good for any of your down payment assistance programs. Oh. You just Yeah, you get that to your lender, so you don't have to pay for it.
Mm-hmm.
I think I answered your question because I could ramble. I don't want to ramble.
Oh, that'll work. That'll work. How long does it take for a loan to close?
Excellent question. I would say on a purchase transaction, I'm getting them done in 30 days. But again, I have a team that works for me.
Okay.
So it just depends on the type of lender that you work with. And so for sure, 45 days, that's a long time to me. I'm getting them done within 30. But one thing that you have to realize is in this market, as far as mortgage originations, a new high, we're pegged to do $4 trillion this year. That's a number that's never been done. So every lender is at their capacity, right? Appraisers are at their capacity. So again, preparation is the key when you get ready to make that purchase transaction. You want to have all your ducks in a row because we don't have time to tap dance and him and her. You got to move. I'm like you, Auntie. I be moved. Look, hey. Let's get it going. Because I don't want you looking at me in 30 days talking about why we didn't close. It's because you've been telling me you're gonna get me a document. You know what I mean?
Yeah.
Yeah.
So 30 days from the time we get the documents to you, or 30 days from
executed contract, from what we call your receipted contract, meaning that both parties that signed the contract and you've delivered the earnest money to the title company. 30 days start right there. 30 days start right there. Yes,
so
ma'am.
What can delay it?
Holidays, like this month. I got folks telling me, when is Christmas? Is it the 25th? Last I checked. These folks quit working yesterday. You know what I mean? So holidays, throw things off. And again, just the volume of refinances and things of that nature, and appraisers are turn times are extended. And that's really the only thing in the process that frustrates me, because appraisers now I can no longer pick up the phone if you were the appraiser like we used to do years ago and work with you directly. There's a disconnect in between. It's called an AMC, an appraisal management company. Mm-hmm. And so I have to order through them. They schedule the appraisal and I can't talk to the appraiser, right? So that's where a lot of time could be lost. So with me, when you get a receipted contract, within 48 hours of that receipted contract, you paid for the appraisal. That's another cost you have to pay up front. Earnest money, option money, inspection, and appraisal. But I'm ordering that appraisal so we could get it ordered and it could come back in a timely manner, so that if there's any a short appraisal that comes in, the selling agent has an opportunity to rebut by getting comparables. We got time for stuff to happen. That's what I'm saying.
Okay, so when it comes to my insurance part of it, mm-hmm. and is the mortgage insurance embedded in the loan, or do I have to pay for that separately?
So if you're talking your hazardous insurance that protects your home, mm-hmm. right? That's a part of your escrow. But I think you're also talking about, and they're interchangeable, for government loans, it's called mortgage insurance premiums. Okay. And then for conventional loans, it's called private mortgage insurance. And you have to have that anytime you put less than 20% of the purchase price down.
But so VA doesn't have to put anything down, right?
Well, I see. You ain't let me get that. Okay. Let me cook this gumbo. No, you're right. see, you've been hanging around me. You know your stuff. So, but VA, that's why I said, and if I didn't say earlier, VA is the best loan, period. Okay. Because you can finance over the 80% loan to value. You can finance up to 100% of the purchase price. And there's no mortgage insurance premiums or private mortgage insurance. Now, fun fact, if you have a 10% or greater disability, which if you've been in the military, you probably got 10%, right? But if you don't, or if you're active duty, you have to pay what's called a funding fee. And for first time use, and it's still 2.15%, but you'll have to pay that funding fee. But VA is best loan out there, bar none.
Oh, cool. Let's talk a little bit about the refinancing part of it.
Okay.
Okay, when someone needs to refinance their home, what do they do to start the process?
Excellent question. I want you to go to your closing packet from when you purchased the home the last time. If you remember, you went to the title company, you either have a physical package or nowadays they may have emailed you the closing docs. And the first thing I want you to do is I want you to get your note, which is 1 to 5 pages. It'll say note on the first page, shows you the original loan amount and the interest rate, right? I want you to get your survey. That's the sketch of your house, okay? I want you to get, it's called a closing disclosure now. If it was an older transaction, it might have been called a good faith estimate. Same thing. I want you to get your GFE from that transaction. You need a copy of your insurance, your hazardous insurance declaration page, the current copy, and your mortgage statement, the most recent mortgage statement. Gather those things, you apply, submit your online application, and then you submit those 5 things along with the, depending on what type of refinance you're doing. I'll pause real quick. If you're a veteran, remember I said the best loan out there, they have something that's called an interest rate reduction loan. It's a streamlined refinance. I'm only looking at your credit, or what we call a mortgage credit report. And all you have to have is good mortgage, haven't missed a mortgage payment on your house. That's the only thing I'm looking at. I'm not verifying income, assets, none of that. Okay. And
they have to come back to the mortgage company to do that, to whoever their mortgage company is to do that.
Can you restate your question?
Or they could go do that. The person who want to refinance their house, do they have to go to the mortgage company who financed their house, or could they go somewhere else?
They could go somewhere else. Like with I'll just use me as an example. With my clients, I stay in contact with my clients, right? You're not even my client, and I stay in contact with you, right? So
I just never been like that.
yeah. But my follow-up game is impeccable. So I keep up with my clients. But say like when we do a loan and we sell the servicing rights, a lot of times those servicers, they got call centers and they'll try to call and cannibalize my customers, right? Mm-hmm. But you could come back to me, you could deal with the service center, or you could deal with somebody completely different. Okay. You're not locked in with that one person. So that's more of a business type thing. It hurts my stomach when somebody leaves me. I'm like, what did I do? What did I do? Yeah.
That was like when someone took someone out of my classroom. I'm like, so what did I do?
Right.
Well, so does it make financial sense to refinance your house?
I think it does, especially in this environment. If you've been in the house 2+ years, it makes sense to at least look at the numbers, right? And bottom line, there's now net tangible benefit clauses. We'll use VA because VA veterans have been taken advantage of for a long time. And let me say this, Auntie, if you're getting these things in the mail and the implication is that FHA or VA is reaching out to you, they don't do that. FHA, VA, and USDA, they are insurers. They insure us as lenders. We lend the money. Mm-hmm. So that's very deceptive and misleading. Okay, and you'll see all that badging around. I caution you guys, read the small print. That they said the devil, where's the devil at?
In that small print.
In the details. Right. It's in the details. And if it sounds too good to be true. So back to, does it make sense? Yeah. Once you run the numbers, okay, and the net tangible benefits, a lot of times if you can recoup your closing costs within a 36-month period of time, it makes sense. I'll just give you an example. On average this year, I'll use VA folks. The 2 that I did this week, they saved $200. That's real money. And watch this, Auntie, took the term and lowered the term. See, I'm a real one. Yeah. So we didn't go back to 30. We either went to 25, 20, or 15 and saved $200 a month.
But they have already paid into it. So they probably was already at 25 years, right?
No. And if you look at an amortization schedule, and really, it's not until year 13 until you really start hitting the principal. It's interest loaded up front. Right. So if you look at your mortgage statement, if you've been into a house for 2 years, you hadn't really made a big dent in the principal unless you've been purposely paying towards the principal. Right. I wouldn't feel bad going back to 30. Again, it's a case-by-case scenario. I'm not a loan originator. I'm a consultant. I'm somebody you keep on the team, right? I don't do transactions because I look at it from a financial planning aspect, real talk, humbly. And so the folks that do business with me, that's why I told that couple, they're buying a $500,000 house and they thought I was going to jump. You miss your opportunity. right? Membership has its membership has its privileges because I'm looking at my clients and I'm looking to make sure I put them in the best position, because you're not the mortgage professional I am, right? So when I reach out to you and say, hey, it's a great time to refinance, I'm also hitting you with some numbers, and more times than not, folks follow suit.
Right. So what is the home equity? What's that?
The home equity loan?
Mm-hmm.
In Texas, excellent question. In Texas, there's a law statute. It's called the A6, Texas A6. And there's 8 things that can't happen in Texas. Texas is a unique state in that on a primary residence, your homestead, right, you can only borrow up to 80% of the appraised value.
Right. Okay.
So on a cash out loan makes sense sometimes depending on, what equity you have and if it's just sitting there. But that's the just. So we'll use an example: $200,000, $100,000 value of the home. You could borrow up to $80,000 of that, less your closing costs and or balance on the current mortgage. In this example, we'll say the house is free and clear. Mm-hmm. So you could pull up to $80,000 out of that home as equity to do what you will with it.
So how could I find out what my debt to income ratio is?
If you wanted to do it yourself at home, it's a simple equation. You could what monthly bills you have going out, mm-hmm. you add those up, mm-hmm. and you divide that into your gross monthly income. If you don't know what that is, you take those 2 pay stubs or those 4 pay stubs that I was talking about, and you look at the gross amount and you add it up, and then you take your liabilities, right? And I say do it at home because when we are doing mortgage loans, we're not looking at your utility bills and phone bills and things of that nature. We're looking at installment loans and revolving loans, right? Okay. And so, but you take that amount and divide it into your gross income. And anytime you're under 43%, you're golden. Let me say this too. FHFA, that's the big guys that do a lot of the governance for these loans. They extended a moratorium on the debt to income ratios. At this time, we were supposed to be a qualified mortgage. That's the new term. A qualified mortgage is one that the debt to income ratio is 43% or lower. Fun fact, here's a little test. What do you think the average debt to income ratio is, Auntie, on loans that are being done today? Take a guess.
5%? I don't know.
55%. 55. People are stretched out.
I had 5. Right? I just knew 55.
You need to add another 5. So if they had not, if the FHFA had not extended the time in which we need to get these DTIs down, debt to income ratios down, just think about the number of people that couldn't buy a house.
Right.
So
that's something.
Yeah, get in where you fit in, guys. If you're thinking about doing it, and again, I'm not a slick salesman. Home ownership is a privilege. It's not a right. And everybody doesn't need to be a homeowner because it's a lot of responsibility. But if that's you and you're responsible and you're ready, now is the time.
Wow. Okay, so I think you already answered this question, the reason to refinance. What are some of the reasons that people refinance their homes?
Like you said, to tap into the equity, kids going to college. Maybe you can, if you have the discipline not to run the bills back up again, but maybe you have revolving debt that's in a old Volkswagen, and you could use the equity of your home as a Ferrari, right? Mm-hmm. Consolidate it, lower the interest rate, and now if you make less than $75,000 and they don't change the rule, the mortgage interest is still tax deductible. So consolidation, getting rid of credit cards, things of that nature, home improvement, right? Or you just might want some, cash is king. I don't care what they say. You might just need some money to the side because stuff happens. You feel?
Yeah.
Yes, ma'am.
Now I know you said earlier that VA loans, they were 100%. Am I right?
You can finance 100% of the purchase price. Yes, ma'am.
100% of the purchase. Okay, so say for instance, it was a $300,000 home, mm-hmm. and I'm VA. Say I'm VA. Okay, mm-hmm. So I want to purchase that home because this is what I want, and I want to purchase that home. So how would you calculate, my monthly cost and everything else that go within it?
So I'm going to have you get a homeowner's insurance quote, right? And in your area, wind and storm is huge, right? $300,000. That might be $3,000 a year for the wind and storm and homeowners insurance. Okay. And then let's say you found an address. There's a real property. So I'm going to go to Jefferson County .cad, and I'm going to pull up the taxes for that property. And as long as the current owner has a homestead exemption, the assumption is you'll have one as well. And I'm going to take the most recent year's annual tax amount, divide that by 12, annualize it. And then I'm going to take your $300,000. And since I'm going to act like we're dealing with you, so you got 900 credit score. So your interest rate is going to be 2.25%. And we'll add those up. Another factor that goes into a lot of these homes now are in what we call a planned unit development, or a PUD, where there's homeowner association dues, right? So we'll factor that in. So we get all those costs, and those are the costs that make up your PITI, principal, interest, tax, and insurance payment. Did I answer the question?
Yeah.
Okay.
Oh, it's a lot to know about buying a home.
It is. And you don't, unless you're doing this, you don't need to know. You need to find somebody that you know, like, and trust, and put them on your team. And you do what it is you do best.
Right. So, okay. So you with this mortgage company, do you deal with other Black investors as far as real estate? What else? Other banks or whatever? Do you deal with other Blacks? Because right now I'm looking to the Black community, support Black people.
Yes, ma'am. Yes,
so
ma'am.
do you deal with them, or you just whatever comes?
You guys could do your Google search and let me know if I'm wrong, but there's only about 6 Black-owned banks in the country, right? And there's a couple over in Houston, and they're smaller and they do certain things. So to answer your question, immediately, no. But this is what I do. Here's my mantra. When all things are equal in business, everything's equal, then I'm looking to do business with somebody look like me first. And I don't give any apologies for that, because that's what everybody else does, right? And so no, I don't deal with a Black bank per se, but I'm a Black business owner. You're a Black business owner. And so what I do try to do is, we have Black realtors. We need some Black appraisers, big time. I only know one of you in your area, okay? But appraisers, home inspectors, try to circulate the dollar that way.
Right.
So unfortunately, no to your bigger question, but that's how I try to do it. And for anybody that's watching, I'm not a racist bone in my body. We all have some prejudice, right? So I'll deal with anybody, but again, don't make any apologies for wanting to help my folks out.
Yeah. Have your own community, right?
Yeah.
Oh wow. I'm glad I got with you tonight, and I want to thank my audience for coming on tonight, my viewers for coming on tonight, because I mean, anything that I see that you guys didn't ask the questions, y'all let me do all the talking. But it's cool too. So, but anything you want to know, can you put your address and your email address up and everything, Robert?
Let's do this. That's how they can reach out.
Yeah, reach out to Robert. His phone number is 210-570-6382. And his email address is going across the screen. And if anything you want to know about mortgage, refinancing, loans, and anything, just call Robert, and he is excellent at what he does. And
thank you, Auntie.
I appreciate you. And that, anytime I reach out to you, I hope that you accept it. And because, I'm going to need you again. I'm gonna need you again to come on out and talk to the people, because this right now we're in this COVID, and he's telling you right now that the loans are low, the interest rates are low, and they're like 2.7, right? And we need to all lower. And if you want to purchase a home or whatever, get it now. Now's the time. Now,
And if I may, Auntie, on the screen, you guys, that if you want to have doesn't cost anything to talk, you get a 15-minute home consultation. That's the Calendly link where you can schedule that time. And I do have to say this, that, you know, the examples that we gave tonight are not necessarily going to be applicable to you. That's why you need to apply and submit those things. But rates are like Auntie is saying, rates are very low. And so you don't know until you reach out. So that's how you can schedule and find out where you stand.
Right. You know, the clock on the wall is saying that it's time for us to go. But before we go, I'm going to do Rob was talking earlier. I was listening to him about December 31st. You said something about December 31st. So, but on Thursday, this week, Thursday, I'll have a special podcast on Thursday night. We have a group of ministers coming on. It's a program about the CDC monitoring on eviction, and which will end on December 31st. It's a way for people facing eviction from their residence to stay in and be put on and not be put out in the streets. And this will be led by the Southeast Texas Faith and Community Leaders and the Baptist Minister Union of Beaumont and the vicinity. And there are going to be Reverend Harmon Dent, Reverend C.G. Johnson, Reverend Ovia Walker, and Reverend Vernon Tuggs. Therefore, join me on Blue Table Talk Thursday night at 6:30 p.m. and listen to these ministers, and let's help our community so they won't be evicted out of their. I think it's more dealing with the apartments. I don't know if it's home. So
yeah, that's right. Because the CARES Act, those that are in apartments, if your apartment complex or the owner received any of the PPE money. Mm-hmm. They can't put you out. So I'm sure that's what the pastors are going to be talking about.
Right. So y'all tune in. If you know anybody, make sure you let them know to listen on Thursday night. Listen to these ministers, and because nobody needs to be put out on the streets. So Deborah was saying, can't say enough how much I've learned and what I need to prepare for. Thank you, Deborah, for listening tonight. And I hope you guys got an earful of what you needed to know or what you wanted to know. And like I said, reach out to Robert, and he's very good at what he does, and I can vouch for that. I mean, I did put something out there, but
don't put it out there. They ain't got to know all that. You said enough.
Thank you, Robert. And if I can help somebody, if I pass along the way, then I know that my living is not in vain. So y'all can continue to support me, continue to pray for me, continue to pray for these families who have been disrupted by COVID-19, that God can touch their families and continue to heal them through this process. God bless you. God keep you is my word. And I'll stay on, Robert, and I'll see you guys later. Bye.